So you hear C Corp, S Corp, all those kind of things, partnerships tossed around. Not sure what they are, not sure which one you should be. Well, this is the video for you. Hi, my name is Matt Coach. I created this YouTube channel to share the tips, tricks, and mistakes on my way to building a multi-million-dollar real estate portfolio. And today I'm going to go over a few different tax classifications for your LLC and what situations might make sense for you to utilize each different tax structure. So let's get to that. Please be advised that I am not an accountant. Please communicate this with both an accountant and a lawyer. But hopefully this information is enough for you guys to ask the proper questions to these individuals so that you can grow and be successful on your own. So further ado, let's get going. So here are the 4 tax classifications for LLCs, what tax classification you might use. We like LLCs because they can switch and flip-flop between these different tax delegations depending on which one makes the most sense to you. So we like the versatility of that. As far as the IRS is concerned, LLCs are not real. They're either a sole prop, partnership, S Corp, or C Corp. So this video is about determining which one you should be. Start with the sole prop. That's if just you create a business, right? Really easy to set up. Usually it's even connected to your social security number, but you could get an EIN for it, which is like a social security number except for a business. So really easy to set up. You know, just go in whatever state you have, set up your LLC, say you're the member of it. That's your sole prop. But there's limited tax benefits. So, you know, it's very hard to do things like write off business expenses, business meals, and things like that. Get much more complicated to do when you have a sole prop. Very easy to get audited, very easy to combine, you know, your expenses, personal expenses and business expenses. So that's an issue. You also have self-employment tax. So whatever money you make, you have to pay self-employment tax. This takes care of things like Medicare and Social Security and stuff that you pay into if you are a sole prop. Partnership, that's you and your partners. So it's an easy setup, easy tax structure, similar to the sole prop. You can have limited partners which have a different tax distribution. They don't pay self-employment tax unless it's like a guaranteed payment, but they don't pay self-employment tax. Those are just basically, think of limited partners, like people just investing inside of your business, your partnership. Then you have the general partners who are running the business. And if you run your business, you will be a general partner. And again, you'll have issues with tax benefits, writing off things like meals and such, similar to your sole prop. And you have self-employment tax that you'll pay as a general partner as well. An S Corp, you have to have less than 100 shareholders to have an S Corp. If you have more than 100, you have to move on to being a C Corp. You have a lot more write-offs than a sole prop or partnership because you can delegate expenses into the S Corp and you can take out distributions, and you get a salary inside of an S Corp. The thing is, it is a more complicated tax return. There's not really as many ways to write off things or get investors because you're limited to the 100 as you do with a C Corp. You can have more write-offs though because you have a board of directors in S Corp, so you could make, you know, maybe your parents and your best friend, your board of directors and things like that. So you can start writing off meals when you have board meetings at a regular basis, things like that. So the S Corp makes a lot of sense for a lot of people who are starting to make a good amount of money to get into that space. You can do things like write off your insurance payments and employee benefits, right? So like you can give yourself insurance and stuff through your business and make that into a write-off. So a lot of those kind of things, setting up IRAs and like SEP IRAs or 401ks through your business, you need to have an S Corp. Do those kind of things. So a little more complicated, but more write-offs than your other one. So look into getting an S Corp most likely for a lot of your businesses as you start to grow. But then we got the C Corp. This is kind of the king of it all. S Corp generally better for the smaller businesses. C Corp generally better for the bigger businesses. But the C Corp, not limited, can have multiple shares of stocks. S Corp only has the one stock. It's just people owning it. You can have preferred stocks in a C Corp, people that would get paid off in the result of bankruptcy first. But your pros, you got much more write-offs than sole prop partnership and your S Corp. But it has its own taxation structure. You pay corporate taxes when you create a C Corp. So S Corp avoids corporate taxes. Because of these corporate taxes, you could get a possible double taxation that comes through on distributions. So if you take distributions from your C Corp as a shareholder, you get taxed as the revenue, and then you get taxed at ordinary income from that distribution. But the real big pro of a C Corp is that you do not pay self-employment tax, and you pay yourself a salary. So if you can avoid taking distributions from your C Corp, you actually are in the best structure for yourself, because you can pay all of your insurances and write off meals, have your board of directors and all those things in your C Corp, write all those things off. Also, and avoid your employment taxes, your self-employment taxes, right? You would just provide those as insurance costs and Medicaid and all those things as a write-off to your business. So all of those things are pluses, and you get Social Security when you're super old and stuff. So the C Corp is, in my opinion, the best one, but also the most complicated one. So you kind of can see, essentially, it's easier, gets harder to do, and the harder ones that it is to do, the more tax benefits you have. People also like the C Corp. So if you go public, you have to be a C Corp, right? Because you have only 100 shareholders inside the S Corp. If you go public, you have to be that C Corp. So you can do an initial public offering and sell off your shares to other people. So the people really like investing inside the C Corps because it has its own taxation structure inside of it, whereas the S Corp is passing down all its profits straight down into all of its shareholders. The C Corp can hold some profits inside of the corporation, use those to regrow. So that's kind of the plus of it, is it's kind of, the C Corp is essentially its own entity, its own, I mean, not really a person or whatever, but its own thing that's paying its own taxes and doing all those things. So if you want to create that separation of where your business is paying for all your stuff, the C Corp is kind of the king in that direction. So there you go. Yeah, thanks for watching.